Hi guys, hope you guys are good. So in today's video, what I will be showing you guys is a DXY and GBPUSD overview on what to expect in tomorrow's trading, right? So we are at a very key level at this moment, and the reason for this video is because of the fact that we are at this key level, being this daily fair value gap. And on Monday, I had spoke about, you know, what to anticipate in this week's trading. I did release a video, a weekly overview, a video on what to expect, and it played out as expected. So we are at this key level. So I'd like to show you guys what I am seeing. All right, in tomorrow's trading and possibly into next week as well. All right. So for those of you guys who haven't subscribed, please do so. And if you do have any questions on YouTube or even TradingView, please do leave them in the comment section. The reason for these videos are to just help, and to just share ideas. That's my real intention around these videos. So if you see me using a specific concept and you don't understand what it is, please do mention it in the comment section and I'll do a video on it. It's just that simple. So let's just talk through the DXY and to sum it up to where we are and what I am anticipating, right, from this point going forth. So on the DXY, we can see that just looking at structure alone, the daily time frame is quite bullish, right? We did take So what happened in price is we formulated this extreme long-term high over here. Price retraced on the monthly time frame into this monthly fair value gap. We took sell stops. Smart money bought against those sell stops. So we see a massive reaction to the upside. Once we start trading above this point, this is where your daily time frame is now bullish, right? And we see we take these monthly buy stops. So from taking external range liquidity, we would like to see the market draw towards internal range liquidity. And preferably in this instance, we'd want to see the market draw all the way down into discount prices, in which there's a weekly fair value gap all the way down, yet in discount prices where we then want to see the market react off, right? Because we understand the simple logic that if you're going to be buying, you want to be doing so in discount prices and taking profits in premium prices, right? So that occurs, we start to see the daily time frame giving us a market structure shift over here, indicating that the idea of continuing the bullish trend is possible, right? It's more plausible. So we see that um, accumulate a bit, and then we reach into weekly buy stops. So that's considered, although we are in internal range liquidity, this is considered as external. And from external, you want to see the market draw towards internal range liquidity, right? So I'd be marking from this leg all the way to that point over there, because this would be my intermediate term low, right? There's my intermediate term high. So we see the market drawing into a discount price, right? We are in discount. If you're looking at the bigger picture, when price draws all the way down here, we go back all the way down into discount and we go into discount of this entire leg. So we go down into a discount price where we draw to a internal range liquidity point, reference point being not the fair value gap, but the order block. We do have a few inefficiencies there, like liquidity voids and stuff, which makes this a very strong order block, right? Because of the inefficiency, the liquidity void. We take these sell stops, so smart money buys against those sell stops in a discount price, and the approach is they then want to take profit in premium prices, right? So they reach into premium prices. We take buy stops. We get a minor reaction off of that as to take sell stops, right? To continue buying. So they're just taking these sell stops to continue buying. So the idea is we are in a bullish institutional market structure. or bullish institutional order flow, which simply means this: you just want to be looking at perfect points such as discount points and order blocks and taking sell stops. You want those points, you want to use those points as reference points to continue your buy idea, right? So we see the market continue. It reaches into these buy stops. And on Monday, price was trading over here when I released the video. I had mentioned that we want to see the daily time frame continue as to reach into this uh, order block, this bearish order block over here. And off of this point, I mentioned that we'd either get a consolidation or you'd see a minor retracement into a fair value gap, or you'd see a retracement lower into a mitigation block being all the way down there. So at the moment, we see it retraced into this fair value gap, and already it's a very pivotal point that could possibly give us an idea of having to continue the momentum as to reach these relatively equal highs. And those relatively equal highs are important because that's a point where there's uh, lots of liquidity that the market would be drawing into. Remember, smart money bought in a deep discount. They want to be taking profits at a deep premium point, being these external range liquidity points right here. And overall, we can see that the daily time frame is bullish. So it only makes sense for it to give you a break of structure, right, over there. And from there, we want to see the market continue. It's a bit of an inefficiency over here. We want to see the market continue as to reach into that order block. So that would be our objectives going into next week, right? I will do a video on Sunday, maybe Monday, speaking through what we'd want to anticipate from a long term perspective. So this being this us being in this very pivotal point, the fair value gap, we had a point where we want to confirm whether this fair value gap uh, will be very will be sufficient enough for the market to continue trading higher, right? So at this point, we can see that we got a reaction of the market pulled back into the daily fair value gap. And another important thing happened. It pulled back and it took the sell stops down here. So this already gave us a false break of structure, which break of structure is considered as a turtle soup, right? Indicating that this is basically a false break of structure and the market is just using the sell stops at this point to continue the market higher. And of course, you want to confirm regions like these. So I do trade GBPUSD. So we'll just pull up GBPUSD. And what we want to see is an indication, right? What we want to see is an indication of the market just through divergence alone giving us an indication that the market is going to continue higher or verifying if this is just a false break of structure. So by doing so, the way in which you'd want to do so is by using SMT divergence, smart money divergence. I do have a video on this. Just look through my video catalog and you'll get a perfect understanding of how to use the smart money divergence tool. So you'll notice that this low over here, price made a high, low. You want to see the inverse of that within your GBPUSD or whatever currency pair, forex currency pair that you're trading that has a dollar that's associated to the dollar, right? So it's not just GBPUSD alone that it works on. So you'll see here price made a higher low on GBPUSD. We made a lower low and then a higher low. Yeah, we made a higher high and a higher low. Yo, we made a lower low and a lower high. My bad, right? It's a bit confusing. Lower high, right? Which is perfect. And then we continue lower to make a lower low. And what price does here, it continues high to make a higher high, right? Which is good. Now notice this point, this reference point, right? It's that point over there. Notice how on the dollar price went lower and took the sell stops off of this reference point. But on GBPUSD, you didn't get a situation where the market continued higher as to take these buy stops over here. In this condition, it would be symmetrical if price did this, but it did not do that, implying that the market is not symmetrical, right? And a non-symmetrical market condition implies expect a reversal to occur, because only smart money could be causing the market not to continue higher as to take those buy stops. Smart money is actively distributing at this point. To distribute is essentially to sell. So they're actively distributing at this point to continue the market lower. So we will get into GBPUSD, right? So on GBPUSD, you're expecting selling, and on the DXY, you're expecting the market to continue buying. So this is just a false break of structure, and you want to see the market continue higher as to reach that point over there, being, those buy stops that we looked at on the higher time frame. If we go a time frame lower, being the 1 hour, we can already see that the market on the DXY is already, starting to switch. Gave us a market structure shift over there, and then it's starting to respect, bullish order blocks. All right. So it respects the bullish order block, and you start to see momentum coming into the market. All right. You're respecting, points such as, we'll go down into a much smaller time frame because you have a order block over here. So we're respecting points such as, I like to mark these reference points, which are, I consider them institutional support and resistance points, because these points over here are considered as reclaimed order blocks. If you want a video on that, please do mention that. We are running a bit low on, a bit running out of time on that. So what reclaimed order blocks work as is perfect support and resistance points. These are institutional support and resistance points. So these order blocks, these bullish order blocks, will be used as a proper, support zone when price goes above it. So they reclaim this point and they continue new buying at these points. So you'll see points like these are perfect support zones, right? So it just gives you more confluence and more confidence that the market is going to want to respect these points and continue higher. You know, every retest will give you an idea of wanting to continue the market higher. So it may, it gives you a reference point, or it's also just used as a form of confluence, right? On how you can see that the market uses these points very precisely. So you could be a trader who sees, you could be looking at an order block, right? You can see in this instance, we have an order block over here, and notice how your order block, this is the 1 hour order block. We see this M15 order block, it's aligned with the reclaim order block. So at that point, you can then, continue your buy idea or look for buying interest at a specific point like this. But of course, you're not going to be buying your DXY, you'd be doing the opposite on whatever forex currency pair that you're trading. I don't necessarily trade the DXY, I just use it for direction and all of those sorts of things, right? So off of these points, you can see that, you could anticipate buying off of these points. Look at this order block here as well. It's aligned with the reclaimed order block, your perfect support zone. So that order block is now considered very strong, right? For you to enter your buy order, SL at the low, continue higher. So very important points of reference that you could be looking into, right? Your very, very perfect support and resistance. So you don't have to, do all of that where you looking at multiple touches. You're looking at institutional reference points, all right, which are very, very precise. But with that being said, let's get into GBPUSD. Okay, cool. So this is GBPUSD. So we're expecting buying to occur on the dollar, right? And if we're seeing buying on the dollar, then there's a likelihood on GBPUSD you'd see selling opportunities, right? But we just want to confirm that, right? So we can see on GBPUSD, um, the moment we, sorry about that, the moment we, you know, GBPUSD has been bullish to the point where we reach this monthly fair value gap, right? That's the last break of structure to the upside. And then the moment you started trading below this point, that became, your break of structure towards the downside, or your market structure shift, indicating a potential bearish draw on, GBPUSD. So for me, my reference points are, that's my long-term high over there, that's my long-term low over here. intermediate term high, intermediate term low. We got a deep pullback into deep premium, right, where we took buy stops and we started to sell against these buy stops, right? And this was basically an indication that you'd want to then see the market continue lower because we are bearish. And another form of confirmation already is, if we're going to just compare our DXY to our dollar, if you're looking at SMT again, very important points. Look at that high over there. We see price makes a lower low, then it makes a high. Look at these reference points. Can you see that the market isn't necessarily symmetrical? This low over here was supposed to go all the way down there and take out that low over there, but it did not occur. So this indicates that smart money was actively accumulating at this point, actively buying, right? This is an indication of a non-symmetrical market condition, implying that you could anticipate a reversal. So the moment price takes these buy stops, you start to see, or you should be anticipating a reversal lower as to reach deep discount prices, right? So we currently are in discount, but we want to see the market continue lower as to reach, this low over here. So we can see that multiple areas like the fair value gap was respected. We continued lower. We took these sell stops. On Monday's video, my anticipation was for the market to come all the way up here as to rebalance this fair value gap. It did not occur. So there's not much information off of the daily time frame except for the fact that we can see that we are currently consolidating. And a consolidation is basically, smart money, you know, tightening up the market as to accumulate liquidity on both the buy side and sell side end of the market. So this is an indication already that you could anticipate the market continuing lower. We are in a 4-hour fair value gap that we're currently respecting, not a fair value gap, bearish order block, right? Go down into the hourly time frame where we can see everything. So I didn't mention it, but on the daily time frame, I'm anticipating tomorrow at least a draw to hit these sell stops, right? Even if it doesn't hit it, then potentially Monday it might get to this point, right? So that's where I want to see the market reach into. And the confluence for that is we can see how the market is actively taking buy stops, right? We're taking buy stops of this whole premium leg, right? So we are currently in premium prices. Notice how the market keeps taking buy stops and we actively respecting it. We take buy stops, then we push lower, right? Now, I'm seeing this whole idea as smart money just actively taking buy stops to distribute against it to continue the market lower as to reach, our draw on liquidity. And already an idea for that on why I am seeing continuous selling and why I'm not seeing the market wanting to continue higher is we looked at this on the DXY. Look at that high over there and this high over here, right? Now notice this point over here. Price in this instance made a lower low, right? Whereas there it did not make a high as to take those buy stops, an indication that at this point smart money was actively selling or distributing, right? So we know smart money is in the market and they're pushing the market down. So we want to be trading with them and not against them, right? So we did speak through DXY and how we're seeing buying momentum wanting to step into the market. So my confluence or what I'm seeing tomorrow is an idea of having to see the market continue lower, right? And that's what I'll be concentrating on at the moment. I won't be due to time. I won't be going all the way down into our lower time frames, but we can see that you can start framing an idea of wanting to push the market lower, especially in tomorrow's London session activity. And you can already see that once we take these buy stops, the market gives you a market structure shift over here. Um, we didn't tap into the extreme order block over there, right? We might, who knows, right? But there's further investigation that has to be done over here. But I hope this will be valuable for you guys to frame an idea of wanting to anticipate more sell side delivery. If you do have any questions, please do get back to me on that. And things such as those reclaimed order blocks that I was talking about in uh, DXY, you could also use those points over here. But in this instance, of course, you'll be looking at, the bullish candles, right? But with that being said, kind regards, the architect.